So why do we look at calendar events? We look at them to find high probability trading opportunities. Now, they don't come along all the time, but when they do come along, they're definitely worth taking. Now, this last week's been pretty quiet. It's the week after the US election, the week after the Fed Reserve meeting, and it's been fairly subdued. We've seen some UK data, payroll data that came out, but it was mixed, so there wasn't a clear opportunity with that. We also saw Aussie wage data. Again, it was on the softer side, but not soft enough to justify Australian dollar weakness. The CPI print was exactly as expected, and so we've seen the continuation of the dollar trade, and stocks took a little bit of a bump higher when they were relieved that the inflation battle wasn't turning against the Fed, still pretty much where it's expected. As we come into the end of the week, we've got the US PPI, initial jobless claims, and we've also got very important UK jobs data coming out on Friday, which could yet provide an opportunity. But for now, there has been an absence of opportunities this week, but nevertheless, it's a week we just have to show patience. When we see the clear opportunities, we are ready to take them, and we'll be looking at the coming week for some more opportunities ahead. So excuse my cat who's just joined in, and I look forward to seeing you this coming week, and check out the cheat sheet and check out the opportunities we're looking ahead, which is coming up now. As we look at the coming week, what are the top 3 events that we can see for potential trading opportunities that will give us a high probability bias? Let's take a look. So first of all, we have Canadian inflation data. That's coming up on Tuesday at 1:30. Now, the outlook for the Canadian dollar remains bearish. The Bank of Canada recognised that first quarter growth was weaker than expected at 1.7% versus 2.2% expected. And Macklem stated that he wants to see that economic growth pick up. Now, after the Bank of Canada's October the 23rd meeting, they've made their intentions clear. They're considering the inflation battle being won. Disinflation is here, and the Bank of Canada really wants to see growth pick up. So what we need to look for is any signs of inflation surprising to the downside will mean the Bank of Canada can focus on the growth battle, and that means they can be more aggressive on interest rate cuts. At the moment, sterling markets see about a 65% chance of a 25 basis point cut for December the 11th meeting, and they see 35% chance of a 50 basis point cut. So a big miss here, and the market's being surprised at the disinflation process being faster than expected, then that should give the CAD a little bit of weakness out of this print. Could be a good pairing with the dollar, with a dollar CAD upside bias. We'll see nearer the time. Wednesday, we got the all-important UK inflation data. Now, the Bank of England's recent decision was a 25 basis point cut with an 8-1 vote, but they were more cautious than expected, signalling a gradual approach to interest rate cuts aimed at guiding inflation back to 2% while balancing slower growth. Now, Bailey has highlighted that future cuts will need to be gradual, noting that inflation risks remain, particularly in the service sector. Revised forecasts from the Bank of England in their previous meeting show that inflation, they're expecting it to be higher for longer, with the 2024 data adjust down to 2.25%, but the 2025 inflation expectation increased up to 2.75%. So what that means is if we see a significant miss in the UK CPI print on Wednesday, it will mean that that's just a little bit more likelihood for the Bank of England to be able to move towards aggressive easing, which can help support the UK economy. So big miss in the UK CPI print, and then look for an outsized reaction in the pound. We've been looking at this really for months, and we still remain waiting for a turning point for significant sequential Bank of England interest rate cuts. A miss here could be the first sign of that, narrative growing. So it's one for us to watch. Europe has been struggling. The stronger dollar on concerns about tariffs from President-elect Trump, the surprise potential snap German election, all of that's been weighing on the euro. So these PMIs out on Friday will be a good indication of where the Eurozone is heading in the near term. And we'll have to see nearer the time how the dollar's reacting for whether we look for two-way action reaction on this print, but another weak print could be an opportunity to short the euro again. Remember, the data's staggered. It comes in first of all the French data, then the German data, then the European data. We'll also have some UK PMIs out around the same time, which could provide an opportunity in the euro pound. It's a somewhat complicated release in the timings of it. Nevertheless, on Friday, we'll have that all prepared on the cheat sheet so we can make sense of it in case we do get a significant deviation. Still worth looking at. So they're the three main calendar events for this coming week. Do check out the cheat sheet, and I will be keeping you updated on what to look for nearer the time, particularly with those that European outlook on Friday. Hope you have a very good trading week.